Hello everyone, welcome to Abhyukt Learning. So today we are going to start with our chapter 1 in accountancy, Introduction to Accounting. So following are the learning objectives of this chapter. We will be seeing the meaning and definition of accounting, attributes of accounting, accounting process, the difference between bookkeeping and accounting, objectives of accounting, functions of accounting, advantages and limitations of accounting, accounting information and its types, uses of accounting information, and double entry system of accounting. So there are totally 11 subtopics. So this will be these topics will cover our chapter 1. So before reading the meaning and definition of accounting, before directly entering into the subject, uh, commerce is a group where we can relate all the subjects in our day-to-day life. If we read business studies or economics, we can relate all the information, all the topics in that subject in our day-to-day life. We can connect it easily. The same way we can connect accounting with our day-to-day life also. See, guys, accounting, we do accounting in each and every house. They maintain some book called as accounts book. What they will do, they will just write the income for a month, and against that, or they will record all the expenses they incurred for that month. For example, if the house was taken on loan, then the EMI what we pay, we will record it, and then we will record all the expenses like grocery expenses. If we go on a vacation, we will record that vacation that expenses in our books, and also um, our electricity bill, our phone bills, what we pay, and our Wi-Fi bill, all those expenses we will record it in a book. And finally, what we will see, we will find out how much we saved for the month. So that is what we need to know. No, if there is we need to have savings in our life. So at last, what they will at the end of the month, they will find how many cash is available with them, how much they saved for the month. This is what they wanted to know by doing accounts in our home. The same thing happens with companies and enterprises also. But there are lots and lots of transactions involved. In our house, we will have only limited transactions, but in companies, we will have some goods. We have to purchase some raw materials, and we will manufacture, and we will sell them in the market. So we will have some sales entry. We will be having some finished goods lying on our godown, like at the month, all the goods will not be sold at a time. So we will have some finished stock. We will have some remaining unsold stock in our godown. So we will have some finished stock. So then we will have debtors, creditors. We have more transactions. We will have employees. So we need to pay salary to them. Then we have salary related transactions. And then if the company has taken a loan or the company has given advances, we will have loans and advances transactions. And if the company owns a building or it has taken rent, then we will have asset related transaction. Asset means the building, land, whatever the company owns, that is asset. So building related transactions, if the company pays rent, then the company will have rent related transactions. So these many transactions are there, and the number of people involved are more. Everything will be in a larger quantity. So, to keep them in a track and to find out the desired objective is to find how much the profit earned by the company. That is one of the desired objective for doing accounts. One is to find out how much the company has earned the profit, and the financial position of the company. Financial position of the company is the company is doing is having a healthy financial position or not. That is what we will know by preparing accounting. The same thing happens in our home also. What we will do, we will see how much we have saved, and is our financial position is good or not. Like, if Can we do some investments? If there is some emergency at our home, will we be able to meet those? Will we able to meet those expenses coming out of that emergency period? All these we will analyze by doing the accounts. So this is what we basically do in accounting. So accounting is done in our day-to-day life also. Even if we have, if, even not in house, we personally we all have a piggy bank. Of many of you will have piggy bank. So we will save monthly this much amount. We will save in our piggy bank, and at last when some amount is gathered, what we will do, we will make a with the, if suppose 10,000 is gathered in our piggy bank, what we will do with 2,000, I will do this much expense. For 3,000 I will do this much expense, and remaining 5,000 I will save it. So like that, we will make few decisions also based on the cash availability we have. So accounts is mainly for knowing the profit earned by the company, and to know the financial position of the company. And with these, many users will take informed decisions. Guys, uh, for example, in our house, if some amount is saved, uh, what they will do after knowing how much amount is saved, and are we financially healthy, after checking these two things, what we will do, our parents will generally buy some gold jewelry, or they will invest in some share markets, or they will invest on some land or building. Like that they will invest, they will have a plan, and they will invest accordingly. So taking these decisions are very very important in life, and that will be based on doing accounts only. The same way, the companies will also need to take some decisions which are very important for the survival of organizations. So what they will do, they will find out the profit earned by the company, and they will know the financial position. After that, what they will do is they will see whether they can expand the business or not. Whether if they can introduce any product line. If there is more cash is available, can they introduce any new product line than existing, or a spin-off product can be introduced or not? Or else regarding the assets, if the building where the company works, if the premise is on rent, can I own the premise? Can I buy that premise itself or not? Will that be beneficial for me? Like that, they will make some important decisions. If suppose the company is not performing well, if suppose some particular product is not performing well, can I discontinue to manufacture the product, and can I start a new product or not? So all these decisions will be taken based on the financial statements. Financial statements means profit and loss account, trading account, profit and loss account, and balance sheet. Based on these three only, we will take uh, the decisions regarding the policies and plans of the business. So this is what happens, guys, in accounting. Basically, we do accounts to keep track of our financial transactions, and after that we need to prepare financial statements, and then we need to take informed decision. So this happens in our day-to-day real life also, and it happens in company also, but just the volume differs. And yes, the volume differs, that's it. I hope everyone are clear with what accounting basically means. So, with this, let's start with an example. So, accounting includes only financial transactions. So, okay. So, okay, we will first read the meaning of accounting. Accounting is a systematic process of identifying, measuring, recording, classifying, summarizing, interpreting, and communicating the financial information. So, each and every word given in a definition has has its own meaning, and it is given for a purpose. So nothing is included without purpose. For example, the systematic process means We should do identification first, second is measuring, third is recording, fourth is classifying, fifth is summarizing, sixth is to interpret, and last is to communicate. In this order only it should go. We should not measure it, and we should not summarize, and then we should not identify. It should not be done haphazardly. Uh, we, we cannot do in a vice versa way, or doing it haphazardly. We need to do in a systematic process only. They have given this word here, systematic process, because we need to start with identifying and we need to conclude it with communicating. And the last word, financial information. Only financial information required is required to be communicated. So only financial transactions should be included in accounting. So this is the definition of accounting, and behind these terms, identifying, measuring, recording, classifying, summarizing, interpreting, and communicating, each has its own definition. So let's take an example and we will read that. For example, for example, there is person Mr. A. He starts a business with a capital. Capital means the amount which we are investing to start a business. The capital of rupees, say 5 lakhs, okay, and then he appointed he appointed Mr. B and Mr. C as employees. So of course it's a startup, and four more, let's take only two of them. And he made following transactions like purchase transactions, and then he had some sales transactions, and then he wants to pay salary, no, so he will have salary transactions. For example, let it be rupees 50,000 per month for each employee. These are all for examples only. That's it. Let's take only three entries. Just for understanding purpose only, we are doing this much, okay? Fine. So, the first thing is they have given and one more information. For example, Mr. B is in production department, okay? And Mr. B is in production department. And so to produce 100 units, the actual time is, let's say, 5 hours. But what he is doing is, he is producing it in 4 hours, okay? He is saving 1 hour. So yes guys, with this we will start the explanation. So, okay. The first one is they have given these many information here. So, the first one is we need to identify the financial transactions and events. So, what are the financial transactions and events here? One is purchase transaction, because purchase transactions will have a cash involvement. We need to pay for whatever goods we buy, and sales transaction. So we will get money for whatever transactions we do, and we have capital. We have introduced capital of rupees 5 lakhs. So cash is also coming in. So capital is the amount with which we are starting the business, that is capital. and we are paying salary. This one is also we are getting. So what is the financial, why they are specifically saying that financial aspect only should be recorded? Because see, in this example we have Mr. B. He works in a production department, so the actual time is 5 hours for producing 100 units. So this, but what Mr. B is doing is he is just taking 4 hours to produce 100 units. That means he is saving 1 hour. So that is the skill of Mr. B. No, it is a skill. So there, so only we could save 1 hour. So what will happen if we save 1 hour in producing 100 units? What will happen automatically? There will be more productivity. He can do more production in units. The productivity, production capacity of the business will increase. If there is more productivity, what will happen? There will be an increase in profit. Yes, no, if for example, in a day, if a normal person produces thousand, let's say 2,000 units, but if Mr. B produces 2,500 units, then there is an increment of 500 units. With his skill, he is producing 500 units more. Then what will happen if there is more production? Then the sales will automatically increase. If there is a demand, the sales will automatically increase, and what will happen? Our profit will also increase because of that. So here what happens is our profitability increases because of Mr. B's skill. Because of Mr. B's skill only, the profitability of the company increases. But we cannot measure the skill in monetary terms. We cannot do that. So what can we record in our books? We will record only the salary paid to Mr. B. Only that we could record in books of accounts. So only the financial aspect of the transaction is involved. Salary paid to Mr. B, that is 50,000 per month. Only this is involved. Only financial aspect of the transaction is involved. Even though the skill of Mr. B contributed significantly in increasing the profit, we cannot record them in the books of accounts because skill cannot be measured in terms of money, and it is a non-financial aspect. So only the financial aspect, that is the salary paid or bonus given. Bonus also sometimes if the performance is good, they will get bonus or they will get increment. So only that monetary aspect only can be recorded in books of accounts. So only the first thing is to identify the financial transactions and events. I hope everything is clear till this one. So here they have given, see, identification is the process of determining which transactions and events are to be recorded. Accounting records only those transactions and events which are of financial nature, as they bring change in the resources. Purchase of raw material and sale of finished goods by the firm. So that's what I said here itself. We will record all the purchase transactions. We will record all the sales transactions and salary amount and capital amount. So all these we will record. So the first step, identification of financial transaction, is done and dusted. Now the second one is to measure. See, writing 50,000 or writing 3,000 or writing 2,000, they are just numbers unless we write some measurement unit behind it. So what is the common measurement unit in accounts? It is the value of currency of the country. If the country's currency is rupee, in India the country's currency is rupee. So we need to write all the values in terms of rupees. If the country is US, then all the values should be written in dollars. If the country is UK, then we have to write all the values in pounds. So the second main thing is, for a transaction, if there is a number, we need to measure them uh, in the monetary terms. For example, purchased um, 10 tons of iron rod. If only this is given, can I record in the financial books of accounts? No, because I cannot record 10 tons of iron rod because only financial aspect, that is the monetary value only is recorded in the books of accounts. So with this information, I can't do anything. What I have to do? I have to value the 10 tons of iron rod in terms of rupees, in terms of the currency of the country. Then only I should record it in the books of accounts. So the common measurement unit of the accounting is currency of the country. So if the value is rupees 10 lakhs, then I will record 10 lakhs in my books of accounts. So this 10 tons of iron rod is not at all required in the financial statements. In the financial books of accounts, it is not at all required. So that is what is given in the second point. Measuring the identified transactions. Accounting measures the transactions and events in terms of a common measurement unit, that is the currency of the country. So 10 tons of iron rod here, for example, is 2,50,000. So with this, we are done with the second point. I hope the second point is also clear. Now the third thing, we have identified the transactions and also we measured the transactions in amount. What we have to do? Now we have to record all the transactions in one place. So what I will do? I will record all the transactions. So there is a book called Journal, and this is also known as Book of Original Entry. So in our books of accounts, the first book where we record transactions are journal. So only this is known as Book of Original Entry. So here we will record all our purchase. First we will record our capital because our we have started our business newly, no. So we will record our capital first, and then we will record our purchases, and then we will record sales, all the sales transactions, and we will record all the salaries paid to them, salaries paid to the employee. So till now we have only till this. So we will record all these transactions in a place and we will record them date wise. All these are recorded in a date wise manner. Okay. If it is 1st of April, then 1st April's transactions will come first. Then comes 2nd April, then comes 3rd April, 4th April, 5th April, like that. In a date wise, in an orderly manner, we will record all the transactions in our journal entry. And this journal has many subsidiary books. We will read here. Recording is an art of accounting financial transactions in the books of accounts. Recording is the process of recording business transactions of the financial character in the book of original entry, that is journal. So financial character is nothing but the financial value. The transactions which have financial value, the same thing. Journal book is further subdivided into cash book, purchase book, sales book, etc. The financial transactions are recorded in an orderly manner, that is date wise they will record. So this journal has many different subsidiary books. We have cash books, we have purchase books, we have sales book, sales written book, purchase written book, like that we have. At last I will say you all the subsidiary books of journal. I hope recording is also clear for you. Now I have recorded all the transactions in a book called journal. Will that be easy for me to will that be easy for me to arrive at any conclusion? Whether it will it help me to will that be the end point of accounting? The answer is no, because here we cannot find out, in this step we cannot find out what is our profit or what is our loss. We cannot find that. So because all the transactions are there in one particular place, everything is written in a date wise manner. So all the transactions are recorded here. So what we need to do, we need to classify them. So classification is the next step. So after recording, we will classify them. So classify them, that is We will record all the transactions of similar nature in one place. So I will open. So for that, what we will use is we will have something called as ledger. Ledger is the second set of books of accounts. So the in books of accounts, the first book is journal, the second book is ledger. So in ledger, what I will do, I will open account called as capital account, and then I will open something called as purchase account. And here, so in this example, we have only four transactions. We have only four accounts, but generally we will have many transactions in a company. This is just for an explanation to understand the concept only. I have given as a small example, but in general we have many more transactions. The last is salary account. So what we will do here, the transactions related to capital account we will write here, and the transactions related to purchase we will write here. All the transactions related to sales we will classify in the sales account. All the transactions related to salary we will classify under salary account. So this is known as classifications. So we will record all the transactions of similar nature in one account. So in ledger we have separate account for each and every head. That is what is classification all about. Accounting is an art of classifying financial transaction. Classification is the process of collecting similar transactions at one place by opening accounts in ledger book. The transactions recorded in the journal or the subsidiary book are classified and posted to the main book of accounts known as ledger. This book contains individual accounts. So the process of taking this entry to ledger is known as posting. So all these we will learn it in upcoming chapters. I hope everything is clear till this now. And the next topic is summarizing. So I have posted all my accounting transactions and ledger. So I have prepared everything. I have opened an account for all the transactions and have posted them here. And the next step is to prepare the financial transactions and events by preparing trial balance. So I need to summarize no with classification at this stage also. By after classifying also I cannot find out the profit or loss of the company. So here what I have to do, I have to do a summary. I have to prepare few statements. So all those statements are once again. Mm. Mm. So I have to prepare something called as trial balance. So from ledger, I will record all the balances in my trial balance, and from this I will prepare my trading account, my profit and loss account, and then I will prepare my balance sheet. So these are financial statements of an enterprise. So from this I can find out my gross profit or gross loss. From this I can find out my net profit. So this is the main thing. Net profit is the profit earned by the company, or net loss is loss incurred by the company. So this will show me the profitability of the company, net loss. And this will give my financial position. Financial position of my company. Is my company doing well? Is it financially sound or not? I will know by preparing the balance sheet. Accounting is an art of summarizing financial transactions. This involves presenting the classified data in a manner which is understandable and useful to internal and external users of accounting statement. Summarizing helps to prepare the following statements: trial balance, trading and profit and loss account, balance sheet. So this is what summarizing all about. See, if we keep it in ledger itself, we cannot find out what is the profit of the company or what is the financial position of the company, and we cannot arrive at we cannot arrive at any conclusion. So only we need to summarize them, and we need to prepare all these statements to know the result of the company. And after preparing the financial statements, we should not have it with ourselves. And after preparing financial statements, we need to analyze them. We need to analyze whether our profit is good or not, if we have earned a good amount of profit or not, if is there is any decline in is there any decline in sales, is there any place where I could control cost. So all these we will do by analyzing the financial statements. Guys, in our house also we will do know if the EB electricity bill exceeds an amount. What we will do, we will find after recording all the expenses. What we will do in our house, we will see if there is any place where I could reduce my cost. For example, in most of the houses, what they will do, they will try to reduce the bill of electricity. So they will try to reduce that most often. In many of the houses, it happens. The same way, what the company also do, the company will also try to find out places where they can control the cost, and where they and the ways to generate income, they will also find out that, and they will devise some plans like uh, buying new machinery, buying a land, or investing in some other company's share. All these they will all these decisions will be taken after analyzing the financial transactions and events. So, analysis and interpretation. Financial data is analyzed and interpreted so that the users of financial data can make a meaningful assessment of the financial performance and financial position of the business. Financial performance is nothing but the profit earned or loss incurred by the company. And the last is to communicate. After preparing financial statements, the company should communicate to the users of financial statements. So, users of financial statements, we will see at the end of the chapters. So, we have internal users of financial statements and external users of financial statements. Internal users are within the organization, external users are outside the organization. So, they will make some decisions by seeing the financial statements of the company. So, for that, we need to communicate them. For example, let's take example of banks and financial institutions. So banks and financial institutions are external users. They are outside the organization, no. So they are external users of company. So what happens if the company goes to the bank and if they ask for a loan, the company needs loan for its business operations. So what they will do, they will go and ask to the bank to give them loan. So what the bank and financial institutions will do, they will ask the financial statements from the company and they will analyze it. They will read the financial statements and that is accounting information. Accounting information, they will go through all the accounting information and they will see the financial position of the company and profitability of the company. If they are satisfied with that, that is, if I give loan to this company, will the company be able to repay my loan along with my interest or not? So this they will analyze, and if they are satisfied with that, they will grant the loan. If they are not satisfied with the financial performance of the business, they will not grant loan. So, and also they will evaluate the assets of the company. Why they will evaluate assets of the company means something we need to give as collateral to the company, something we need to collateral to the bank. If we get loan from bank, we need to give something as our collateral. We need to pledge something with bank. No, so for that they will evaluate the value of asset, and they will see if the company couldn't repay my loan. If I sell the assets pledged by the company in the market, will I be able to recover at least 90% of my loan given to them or not? This is how they will make an evaluation. And sometimes this will also happen if the company wants known. But what happens if the bank and financial institution in advance will see the financial information of the company, and if they are satisfied with the company's performance, they themselves will go and offer to the company to get loan from that particular bank. They themselves will go and ask to get loan from the bank, and they will also give them to make them get loan from their bank. They will also give some um, they will also reduce the value of interest for the loan taken by them. So, for these purposes only, banks and financial institutions will uh, analyze the accounting information of that particular company. Similarly, we have creditors, we have government, and we have shareholders. By seeing the financial statements only, they could take the in decisions. So let's read the definition. Accounting involves communicating the financial data, that is, financial statements, to its users. The financial information should be provided in time to the users so that they can take an informed decision at an appropriate time. See, guys, this year's financial information we need to give as soon as possible. We should not make a delay in publishing the financial information to the users. We need to do at least within 1.5 or 2 months after preparing the final accounts. If there is nothing, what will happen if it is not given at time, given at the right time? Then there will be no use, no, whatever thing it is. If something is not done at a correct time, at a right time, then there will then doing that act afterwards will not give us any benefit. So we should not postpone things. That is what is given here also. So the financial information should be given at the right appropriate time so that everyone can be benefited out of it. So I hope everything is clear. So these are nothing but attributes of accounting. So now I hope the meaning is also clear now, why they have given a system, why they have given the word systematic process, why they have given the word identifying, measuring, recording, classifying, summarizing, interpreting, and communicating, the meaning behind each and every word. That is, what is identifying, what is measuring, what is recording. I hope all the meaning behind each and every word is clear till now. And the word financial information, why they have given the word financial information? Because we are recording only financial aspects of the transactions. So that whole financial statements, the financial statements completely is known as financial information. And the next is attributes of accounting and process of accounting. So identifying the financial transactions in events. The second step is to measure the identified transactions. The third is to do recording, and the fourth is to classify the recorded transactions. Fifth is to summarize the classified transactions. And sixth is to analyze and interpret the financial data, that is, after preparing trading account, profit and loss account, and balance sheet. And the last is to communicate the accounting information, that is, financial statements, to the users of account at a right time so that it can help the users of financial information to take informed decisions at an appropriate time. I hope everything is clear, and this is the flowchart of this accounting process. First is to identify the financial transactions and events and recording them in the monetary value. So guys, this is what I said, the journal, and below they have given no cash book, purchase book, sales book, purchase return book, sales return book, bills receivables book, bills payable books, and journal proper. All these are subsidiary books. Okay, subsidiary books. And from here, what we will do? We will post them to the ledger, and from post them to the ledger, and that is nothing but classifying. And from ledger, we will prepare a summarized statements like trial balance, trading profit and loss account, balance sheet. We will analyze and interpret, and at last we will communicate to the users. So this is given in a flow chart. So I hope this will be a good help for you in remembering the points. And yes, guys. So I hope everything is clear till this one. In the next class, we will be seeing the next topics Is accounting an art or science, and branches of accounting, all these we will see in next class, in our next video lecture. If you have any doubt, please post it in comment section, and also please subscribe, like and share the YouTube channel Avyukta Learning. Thank you so much.